Welcome, guys, back to Before the Millions Trading Academy. Today, I'm going to be teaching you guys exactly how to exit your trades at the perfect time. Exiting your trades is one of the most important aspects of trading. Right? You only make money when you exit. A lot of people put a lot of time and focus on entry. When do I get in? When do I get in? And yes, that is extremely important. But don't forget, you only make money when you exit. So the same level at which entry is important and know when to exit in terms of stop loss, the same thing it is when it comes to reward. So today we're going to be breaking down just the perfect way and most simplistic approach to knowing exactly the perfect time to exit your trade. So first and foremost, I want you guys to understand this principle here. There is no way, there is no way to know the exact point when the market will turn around. Regardless of what a guru says, what a strategy, no matter what type of inside scoop someone thinks they have, it is impossible to know exactly where the market will turn around. If the market is pushing up and you're in a buy and it's going, there's no way to know exactly where it's going to turn around or exactly if it's going to keep going. So you have to first and foremost understand and accept that. When you have a strategy gives you probability that the market is going to do a certain thing, right? You have an edge. So your strategy basically just tells you, okay, when the market does this set of things, step one, step two, step three, when these things happen, there's a higher likelihood that the market is going to either head up or head down, right? Now the question is, okay, when do I get out? Well, understanding when to get out is depends on your strategy and your approach. You have to simply set a structure for it. The same way you set a structure for your actual entries, your strategy, right? The same way you have a strategy for entry, a step-by-step process, you have to have a step-by-step process for exit. And that's the only way to function and to be able to make consistent profit. And that's the only way you can actually find some type of data source to back your profit, right? So when you're back testing and you're testing your strategy, if you have a principle, a strategy as to how you exit, whether it's based off zones, Fibonacci, risk to reward, right? These are some imbalances. These are some of the terms and names that we heard of, and these are some of the ways that you can actually be able to exit a trade. Now, I'm going to break today's down into two simple categories, two simple types of traders, and every single trader will identify with either one of these. And you can kind of play with it just to figure out which one is best for you. But again, the key thing, guys, is picking a way and just rocking with it. Sticking to that every day. And now your life is simple, your process is simple, and there's no overthinking or like throw out the thought of exactly where the market is going to turn around because you're never going to know. Right? So the two types of traders are gunners and runners, right? Every single trader falls into one of these categories, just depending on how you see the market, right? And just the type of person that you are. There's advantages and disadvantages to both, so let's go ahead and run into it. The runner. What's a runner? A runner is more of like a swing trading style type of person, usually. You can either one, but primarily a swing trading type of person. And their key focus is risk to reward. So essentially, you're just trying to hold winners longer. So you're going into a trade, maybe you're looking for a 2R risk to reward, 3R, 4R, even more sometimes in terms of risk to reward. So you want to risk $100 to make 500, to make 300, 700. So you're looking for those big wins, right? Those wins that take care of 3-4 losses, those wins that really set your P&L very, very well. And when you're a runner, you don't necessarily have to have a high accuracy. So if you're a trader that doesn't really have the best accuracy, your best bet is to be a runner and hold your winners longer just so that they're much bigger and they're able to accommodate for some losses. Now, the only con that comes with being a runner is you're going to have frequent break evens or small wins in terms of you have to trail your profit, and that's a way you can kind of help yourself in terms of maximizing the potential profit you get. And I'll talk a little bit more about that as we get into the video, but learning how to trail your profit. But essentially, your goal is I'm trying to enter and hold this trade and make a big win, get a good risk to reward and good percentage on this trade. That's the first type. You got to have some patience for that one. Now, a gunner. This is more of an intraday style trader. They're not really focused or care too much about the long term play. Their biggest focus is being able to take what the market gives to them, right? And that can be your approach too. Understanding that, hey, you know what, I cannot control what the market is going to do, but at least let me go ahead and just take advantage of whatever the market hands me, right? So their key focus is taking profit frequently. So you'll see people that have multiple TPs. They'll have a TP one, two, three, four. They like to just take the market as the market goes up, or they may have one central TP and then take partials as the market goes up. So this is more of a gunner, and their focus is just to allow the profits to add up and stack up, and just to continue collecting wins. And this is definitely good, especially if you're a trader. Maybe you're going through a losing streak or you're going through a tough time and you're trading. Maybe a gunner will be better for you, just so you're having wins, right? And wins are great for your psychology. Constant wins, and it definitely does add up. It helps you kind of take care of some of those losses. And you're just looking to take profit more often. So, pretty much most days of the week, at least if you have a pretty good accuracy, you're going to be making some type of money pretty much every single day. So that's the pro, right? You're booking profit often, and it's going to add up pretty nice. Now, the con is you don't have really that much of a big risk to reward, right? So if you're taking partials, there's going to be certain days where your losses may be bigger than your average win. So say, for example, you risk 1% on every trade, let's just say $100, and you get into a trade, and when your trade goes a 1-to-1 risk to reward, so you risk $100. Once you're in profit $100, let's say, for example, you take half of your trade off the table, which is $50, and you let the rest of your trade run. What that would look like is pretty much like this, right? I'll just draw a diagram. Let's say this is where you wanted to enter from, right? This is your entry, let's just say this here is your overall take profit, right? There's your TP, and here's your entry, right? Now, of course, in every trade, you will have to have a stop loss, and let's just give ourselves an imaginary stop loss. I'm just going to show you guys, pretty much just a visual representation of what each of these will look like, or what each of these traders would do in the same given scenario, right? So this will be your stop loss. So what you will see is, let's just say, your stop loss was this. So, if you entered off of this and your stop loss was here, take profit was here, you have a nice 1-to-4 risk reward ratio. You can see right here, 1-to-4 risk reward ratio. So you're risking $100 to make 400. So a runner would look to enter here and just hold until the market gets here. You have to have the patience and be able to hold the market, chopping around, playing around, doing a lot of mess before eventually getting to your TP, right? There's going to be times where it runs straight there. Those are going to be rare, but essentially that's what you're ideally looking for. Now, you have to be okay with the market pushing up, then coming back, hitting your break even, right? And, certain runners never even move break even, and they are willing to take the loss if they fully accept the risk. It's up to you. And the key thing, guys, is look at the data. Just back test. If you look at the last 50 trades or 100 trades, if you have a system, if you have a trading system, and it's a real system, you have a entry criteria, but you also have a time and place at which you're looking for this criteria. So you can look, if let's say it's New York session, you're looking for a specific criteria. You can look at New York session for the last 10, 20 days, 30 days, and look at how frequent you're getting your criteria in terms of your play, how often are you getting your play, and how often are your plays hitting TP, right? How often are they getting halfway and turning around? You can get this data, and through that data, figure out what's best, right? Should I just hold for this TP, or maybe I should set 1, 2, right? Maybe I should set 3 TPs. So I start with risking $100 here. Once I'm up about 150, right? So it's kind of like I'll set, like you're setting 3 runners, right? One is coming here, one is coming here, right? And the last one is going to your final TP. Now, you're risking the same amount. If you're risking $100, you're risking $100. Just because you're a runner, you're a gunner, does not mean you're risking a different amount of money. We can both risk the same amount. We can both risk 100. That's a really ugly 100. Let's redraw that. So we're both risking. That's a little ugly too, but it's a little cuter. Huh? I just made it worse. All right, we're both risking $100. The way you'll do it is this one will be 33, this one will be 33, and this one will be 33. Right? So let's just say this was risk to reward. What would happen in this situation is you have $33 on the first entry. You risk 33 on all these entries, right? So the first one gave you a pretty much a 1-to-1. So you would have collected $30 on this entry. So now you got $30 plus your second entry. Let's just say in both situations we made it all the way to TP. Your second $30 play gave you a 1 to 2.6. So what's 30 times 2.5? That's 60, 75 plus 75. So you made $30 on the first play, 75 on the second one because the around 80, let's say 80. So because this one is 33, you got about a 1-to-1 or 35. So, and this is just, average, right? Or approximate numbers. So you have that 33 that gave you a 1-to-1, pretty much 1-to-3, 1-to-1.3. Your second one gave you a 1-to-2.5. So you made $80 on the second entry. The third entry, where you risked another $33, gave you a 1-to-4, which is pretty much what? 120, 130. Oops. No, 33 is 99. That's about $100. No, times four. I'm sorry. 130. Yep, there we go. So you got around a 1-to-4 on 33, around 130. So together, adding this all up, let's see how great my math is. 130 plus 80 is 210 plus 35 is 245 on this play, right? So this was a 1-to-4 risk to reward play that you ended up making $245, which is pretty much a 2.5 risk to reward trade ultimately by you being able to buy the market getting to your final take profit. So, the gunner would have made, just going to put a G, would have made 245. Now, a runner would have risked 100 just to get for that whole 1-to-4. So they would have been able to make $400 on that same play. That's the difference. That's in a great situation. Now, in a situation that, let's say the market only went, halfway and then turned around, which happens often, and it's depending on your strategy, you have to see how often it happens. Well, in this situation, someone that's a gunner would have hit TP1 and TP2, so they would have made about 115, and the runner probably would have made zero, right? Or maybe you trailed your profit in some type of way, so maybe you made $30 or $40 or $50. I don't know, but you definitely would have made less than the runner if you trailed your profit. So that's the give and take when it comes to being a runner and gunner. And guys, what you have to understand is there is a randomness that comes with the market. You do not know which play is going to go straight to TP and which one is not. When you accept that simple fact, everything becomes much more simple. All you need to do is set a structure and a principle for how you're going to exit your trades and then abide by it. Do the homework. Do your homework. Find the data. Look at the last 100 trades. Look at, sometimes when I'm back testing, I will back test the entire 2022, the entire 2023, the entire 2024. I'll go to the beginning of January 1st and back test all the way to today, June 3rd. And back test every single trade that aligns with my strategy during the time I'm supposed to trade. And you can find the data. You can see how many of your trades are actually heading to TP3, how many of your trades are ended up going break even, how much are kind of going halfway and then turning around, right? So if you're going to be a runner, here's a tip at which you can be able to take advantage of your trades, right? If you don't want to, because it kind of hurts. If you were up $200 and the market turned around and now you're at break even or you lose, that hurts, right? So I don't believe in being in good profit and still allowing the market to take money from me. I definitely do not believe in that. I am more of a runner type of trade. I like risk to reward because risk to reward allows you to not need a high accuracy. And let me show you guys something that's pretty cool, right? Let me show you something that's pretty cool. You can actually use this website Risk to reward calculator. Just gonna kind of right here we go. And this right here, you can use this website just to pretty much understand what whatever risk to reward option you use, the type of accuracy you need to be able to break even, right? So if I was a 1 to 3, let's just say I was a one risk one to make three for every trade, and I'm a runner. I only need a 25% accuracy to be in profit, right? I will to break even. Sorry. So anything above a 25% accuracy, I'm in profit. 30%, 40%, 50%, 60%. That is all profit more and more and more. But as you see, if you're a gunner and you're shooting for, let's say you're shooting for a 1 to 4 for your overall TP, and even with the 1 to 4, you only were able to grab a 1 to 2.5 overall risk to reward. Well, if I was to change this to 1 to 2.5, you're going to need over a 28% accuracy to be able to make money. Now, again, some of these wins are going to be smaller than your risk potentially, right? Maybe if you only hit TP1, you made less. Let's say you're risking $100 every trade, and you hit TP1, and TP1 gives you, let's say, $50. Well, that's not. If you lose the next trade, you're still going to go in the negatives, right? So that's just a risk reward factor that you're giving up. But that's just, like I said, look at the data and then accept whatever system you're going to use and rock out, stick to it, right? So like I said, for the runners, I'm gonna leave you guys on this. If you're a runner, let's say for example you're a runner, and let's just say you wanted to buy here, right? You seen this low, right? Let's just say you seen this low, you know, take out this low. You seen that liquidity for those for my institutional traders. We're stumbling on my words. And for my people that trade regular retail, you see the zone, you see the rejection, you see the engulfing, regardless of however you look at the market. You see bullish potential here. Well, if you are let's say you're a runner, and let's just say hypothetically that your TP was here, right? So this is what your play looked like. Stop loss below the low, TP at the high. That's a 1 to 4 risk to reward. Now, if you're a gunner, you'll probably either you can set your TPs for my gunners. You can set your TPs based off of whatever you want, right? It could be zones. You can look at these minor zones, these minor levels, right? These minor levels and be like, all right, because prior to any of this happening, the market would have looked pretty much like this. Boom. So you don't know what's coming next, right? So if you're a gunner, you can be like, all right, I see a level here, so I'm gonna take partial profit there. I'm gonna have my TP2 set here, and then I'm gonna wait for final one. And let's say you want to do a 3, TP3 set here, and then you got a final one here. However you wanted to do it, that's up to you. If you're not as good, maybe you're a beginner trader and you're not as confident in your ability to find zones, you can just simply do it off of risk to reward. You can break it down into thirds, right? If this is your overall zone, just break it down into thirds. These are your 3 sections, vaguely, you know what I mean? TP1, TP2, TP3, keep it real simple. You can do just a TP1 and TP2, right? So halfway there and let it rock. It's up to you guys. Don't overthink this, because you have to remember, if you have a strategy that's profitable, most of your trades are going to go into profit. Most of your trades are going to go into profit. So it's up to you on how you want to take it. Just structure it so you're not overthinking which one to do this time. That because what's going to end up happening if you don't have structure is one time the market's going to get to a high and turn around. And you're going to be like, damn, I should have took partials, or dang, I should have closed early. And then next time you're going to close early, but it's going to go all the way to your TP. And you're going to be hurt, and you're just chasing your tail. You're just chasing your tail all day. So if you're a gunner, you can set it however you want to set it. If you're a runner, you want to trail your profit based off of market structure. Now, if you guys understand just the basics of market structure, the definition of an uptrend is higher highs and higher lows. If you're looking for a buy, you're expecting the market to make higher highs and higher lows. Well, if you're a runner, how do you trail your profit? If the market definition of an uptrend is higher highs and higher lows, as long as the market continues to make higher highs and higher lows, the market should continue to go up. So I know that after a higher high comes a higher low, then comes a higher high. So if the market makes a higher low, the market should never go below that, because after a higher low is a higher high. So a safe place to put your SL, to trail your stop loss, is behind these higher lows. So after the market has a low and it breaks a high, so that'd be at about, right there. You can now put your stop loss below the low, right? The market came, made another high low, and started to push up and started to go for its higher high. Okay, I can now trail my stop loss up and move it to the new higher low. And as the market continues to make higher highs, you continue to trail it up to the higher low, to the higher low, to the higher low. And if the market does not end up hitting your take profit, right, at least you were able to trail yourself out the trade, and you would have exited about right behind this low. Boom, right? Let's say you had your stop loss there, or if you had your stop loss there, regardless. Let's say you had it here. You would have exited your trade right here. So no, you wouldn't have got your 1 to 4, but at least you would have got a 1 to 2.86. So you still got a pretty decent amount out the trade. That's still a 1 to 2.86. You risked 100 to make $286. The gunner was able to make some money too. You got a TP1 and TP2. So everybody can make money. Everybody can be successful. It doesn't really matter which one you pick. You just have to pick one for your sanity and for consistency. It's the only way to be profitable as a trader. Find a way and a structure at which you're going to take your profit, just like you do your entries, and I guarantee you'll be consistently profitable. When it comes to deciding what type of trader you want to be, do it based off the type of person you are, and then confirm it based off of data. Don't just say, "Oh, I don't have patience, so let me be a gunner." Okay, you don't have patience, so your patience is weak. So maybe you favor being a gunner, but go and look at the data. Go look at the data. If you're missing out on a lot of money because you keep being a gunner, you might want to work on your patience a bit so you can, make some more money in the market. Because at the end of the day, the goal is not how you feel. The goal is P&L, right? I hope you guys enjoyed this video. I know you gained some value from it. I promise you, if you follow these techniques and you follow these rules and structures, you're going to be a consistent, profitable trader. Not only a consistently profitable trader, but a consistently profitable trader with peace of mind. That's very, very important. I hope you guys enjoy your night. We out of here.